All right, so good day, guys. I hope everyone is doing well. This is our first lecture on Forex. And then, please, before we start, I would like everyone to note this down. In Forex trading, you have to first learn, and then you take the L, that is the loss, so that you earn later. I don't know where I got this quote from. Definitely from one of my mentors. But yeah, this was been keeping me going because I think that you have to learn first before. If you don't learn the skills, I mean even in everything, in finances, in education, everything. Well, if you don't learn, you will not be able to understand what you are doing. If you don't learn, you will not be able to pass your examinations. If you don't learn, things are going to be hard for you. So in everything, you have to learn. But then in Forex, you lose money, so you have to learn. Then you take the L out of the N so that you can earn now. I hope you guys understand this. So you know this one down so that we can start out. I don't know how long this video is going to be, but I think it's going to be quite pretty long because yeah. So I'll tell you guys about myself a little bit. I am Maurice Siako, and I'm a tertiary student. Okay, the degree is very very important. Even though we are forest trader, you still have to learn and yeah. Elvis Justice is my mentor. Okay, and he's the one that groomed me to who I am today. Um, and then Onokro, a doctor. Okay, he's a doctor, and then he has retired. He's not even 30 years, but then he's retired. He only got down the PhD, and then he he decided to not be a doctor anymore. Yeah, because come on, forest money is taking care of everything. Let's start our session. Please, I'll be talking a lot, right? So you have to listen to me other than, watching what I'm writing. But then it's important that you watch what I'm writing too. But then I'll be talking a lot, so make sure that you're listening carefully. We will start from telling you the chapters that we will be covering. Okay. So chapter 1, write this down. Forest World. Okay. Forest World. That's chapter 1. And then the chapter 2 will be the glossary. And then I'm sorry, the glossary is about the forest foundation. Sorry, the forest foundation, the forest foundation, and then the terminologies. What is this? What is that? That's the glossary. And then the 3, we have the cycle, and then market structure. Market structure. And then number 4, we have technical analysis. Technical analysis. And then price action. Okay, then price action is actually technical analysis. So we have price action, okay, and then chartism. Chartism, talking about the charts. Number 5 will be okay. So I have to add this to the number 4. Okay, Fibonacci. 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 I hope you guys know Fibonacci numbers. It's from mathematics. 1 point blah blah blah. It's crazy. And then we talk about candlestick patterns. And then also we will talk about trading strategies. That's number 6. Sorry, guys. Trading strategies, number 6. Number 7 is going to be risk management strategy. Risk management strategy. And then number 7, did I say number 7? Okay, number 7 is going to be fundamentals. Okay, fundamentals. Fundamentals and its effects. Please, it entails a lot. So if you think you are about giving up even right now, you are free to give up. I don't want students who are lazy, who are not serious. Honestly. Back some time ago, I tried to teach some friends Forex, and then they gave up. They gave up so early. I mean, I can't blame them. It's not their fault. I would give up too, considering the things I'm writing right now. And then number 8 is correlation in forex trading. Correlation in forex trading. Number 9, market manipulation. Market manipulation. Manipulation. Blah blah. And then we have number 10, which is monitoring the market. Monitoring the market. Monitoring the market. Hey, please spell market. Write it there. Just continue with market. And then number 11, the most important part of Forex, that's psychology. And then it's crazy how I know number 11. Meanwhile, I should have started, but then if you don't know what you are doing, you wouldn't even know about the psychology. So, psychology. And then once again, that's the most important part of Forex. Okay. And then number 12 is going to be trading as a business. Trading as a business. That's the last chapter. Then we'll be done with this course. And then the bonus one will be rules of a successful trader. Rules of a successful trader. That will be the last one. And that's the bonus. Free rules that I'll be giving to you guys. Alright, so once again, if you want to give up, you can leave. I'm about to start. We start from number 1, chapter 1. That's the Forex. Okay, the Forex. Oh, what's happening? Okay. The Forex. My phone is stressing me. Okay, so Forex is the largest, okay, of all the financial markets. Forex is the largest financial market. It is the largest. I didn't take this position. You see, guys, I have I have a trade open. Okay, not a trade actually. I have this position that I wanted to take. Okay, somewhere around here. Okay, whilst I was doing this video, I had to, I should have put buy limit there, a sell limit actually, but then I forgot. So I was, thinking, say, Drew, I'll do it manually. And then it came to this part, and then I wasn't able to, take the position in. I am a Japan, honestly, because I was, making this video and then I was focused on this one. But then, I mean, definitely there are so many opportunities to come around. All right, let's continue. Um, Forex is the largest financial market in the world. In the world is the largest financial market, and then the reason is the largest financial market is because in Forex, $3 trillion moves a day. $3 trillion. Okay, 3 trillion, $3 trillion a day. So every single day, more than $3 trillion is moving in the financial market, forex trading. Okay. And then we have, you know, people moving that amount of money, and that's the investors. Okay, we have investors, we have the banks, we have large institutions, large institutions, and then we have individuals. Okay, individuals too. And then they are the ones moving the money from one place to another, and then that's the $3 trillion. These people are the ones moving them. Okay, and when I say moving, the amount of money in the forex market during a day, the amount of money circulating. Okay, that's what I'm talking about. So forex is actually the of exchange of one currency one currency to another. The exchange of one currency to another. That's forex. Okay. And so the financial market, forex trading, it opens 5 days a week. And so that 5 days a week is from Monday to Friday. So on weekends, that's Saturday and Sunday, you can't trade, or you don't trade, except for the synthetic traders, which I am. But then we'll talk about that one too later. That one is part of my premium course. It opens at 10 p.m. Okay, on Sunday, 10 p.m. on Sunday, and then it closes at 10 p.m. on Friday. And so, even though you could go to the chat on Saturday and even Sunday till 10 p.m., you wouldn't be able to trade because nothing is moving. Nothing is moving. It's like it's been paused. Okay, the chat has been paused and nothing is moving. Okay, so that's it. Now in forex market, okay, we have four major sessions. Four major sessions or trading sessions. And then the four major trading sessions, we have Sydney. Okay, Sydney. We have Tokyo. Tokyo. We have London session. And we have the New York session. The New York session. Okay. And then these sessions are times that people trade, times that the market is liquid and then everyone is around. You see, for the Sydney and the Tokyo, we talk about it less because even in Ghana, okay, our time, no, during that time, at midnight, okay. But then the London and New York sessions is around 12 o'clock p.m. to 3 o'clock p.m. going down to 5 p.m. thereabout. Okay, that's very. But then every session has the currency that if you trade, you are going to see the liquidity in the market. You get it. And when I say liquidity is when people are buying and selling fluently. Okay, they are flowing. Okay, so that's why I said yeah, in Ghana we are able to experience the landing in your session more, because at that time it's daytime. But then during the Sydney and Tokyo, it's like midnight. Okay, and then people don't really trade at midnight. Even though my best trades, okay, personally, my best trades comes at midnight. I don't know. In the morning, I'm able to, get some losses. But I think at midnight, I don't know what happens in my head, but it's crazy. I don't even make any loss during midnight. But then in the afternoon, in the morning, I sometimes, see some reds in my account. Okay, so we'll talk about the landing session and then your sessions later. Okay, so we'll continue to the advantages of Forex. Okay, the advantages of Forex. Advantages of Forex. Now, the advantages of Forex, you see, people would ask, why should you trade even Forex? Like, why? Why should you trade Forex? There are so many things that you can do, right? But so why choose Forex? Well, I'm not here to convince you because Ghana heading. So basically, we are trading Forex because we want money. But then why are we choosing Forex, not stocks, not even cryptocurrency? Why? Why are we not investing in them? But then we want to trade Forex. So you see, one big difference between Forex and other financial markets is that you see shares, for example. Shares, for example. Okay. Since there are hundreds of companies, okay, there are hundreds of companies, it is very difficult for you to, profit above 12, okay, sorry, 15 to 20%. Okay. It is very, very difficult. I'm not saying you can't surpass that, but it's very, very difficult for you to go above 15 to 20% profit. Okay. And it's completely impossible to know when a company will actually disappear overnight. Okay. So a great advantage of Forex is that it is simple to understand. Okay. Maybe won't say that there are some terms would be, kind of, new to you, but Forex is actually simple to understand. Very, very simple to understand. You don't have to stress yourself and all of that. The difficult part of Forex, okay, even if I say it's simple, the difficult part is actually the psychological part, okay? And that's what we call the psychology. It's very, very difficult. And then that's where Forex is mainly at. So if you have a good psychology, okay, you are 80% there. Not even it. I'm not saying you are 80% there. I want to say Forex is made up of 80% psychology, and that's like your brain, yourself. Psychology is not what you are learning from it's your head. Okay, what's in your head? How you control your feelings? That's it. We'll talk about this later because you have a chapter for it. And then 15% of traders actually make money. People will tell you that 99, no, it's not 99. People say 99% of traders fail and then 0. Nah, please. At least we have a lot of traders in this world that are making money. So let's say 15% of traders, 15% of traders, okay, they make the money. And then the other 85, they have a bias psychology, so they give up, or they are unable to, go get over their emotions and all of that. They are unable to master their emotions. Okay. So let's continue. Um, we as the investors, okay. We as the investors, okay. We participate in trading, okay. We participate through a broker. So a broker is like, you know, you have a girl, you are a boy, and you want this girl, okay, and then but you can't get to this girl, okay, so you have a friend who does the communication for you, okay. This friend is the broker, the intermediary, okay, between you and the financial market. If you don't have a broker, you will not be able to trade. So upo umpo, whether you like it or yes, you need a broker, an online broker. There are so many brokers, and we'll talk about this one too. So, but this one, I'm just introducing you to the forex market. That's why I've not been going deep into whatever I've been saying. Eventually, we will get there. Okay. So, what is manipulation? Okay, or let's say what who is behind forex manipulation? Who are those trading? Who are the people trading? You say we are trading, but who are those trading? We have banks, okay, and then we have investment. Yes, banks trade, banks are trading, and they are the most biggest market makers. They actually control the market. Or if they buy, the market is going up. Okay, good. And then we have investment funds. Okay, they are also the second market makers. Second market makers. And then we have companies. Okay, we have companies. And then we have retailers. And then, yeah, your guess is as good as mine. Retailers is you and I. You and I, we are the retailers. And then we, as retailers, our volume is very, very ridiculous. Our volume, okay. And when I say our volume, is the amount of um, loss size, or let's say the amount of money that we are putting in. It's very, very low. And trust me, you might have seen people having $10 million. Do you know how much the banks trade? The banks, they trade with 1 billion, 10 billion. Okay, so the amount of volume that we the retailers we have, it is very, very ridiculous compared to the banks. And so we trade based on what we think the banks are doing. Okay, we trade based on what we think the banks are doing. So we trade with technical analysis, and then the fundamentals analysis and all of that. Okay, and then we trade through brokers too, as I said earlier, brokers. Please, if you don't understand anything, I have my group, right? So if you are part of the group, you make sure that you DM me, and then I'll explain things to you better. But I think I'm doing my best as at now. Okay. And so the world has evolved. Okay. The world has evolved. At first you wouldn't be able to trade with $500, but now even if you have less than $10, you can still trade. Yeah, you can still trade. If you have less than $10, you can still be able to trade. But it is very, very difficult for you to trade with $10 whilst having a strict risk management. Okay, it will be very, very difficult for you to do that. Nevertheless, you can still trade with it. Okay. So we go on to forex. Okay, transactions are speculative. Okay, forex transactions are speculative. They are speculative, meaning anyone who buys or sells, they don't really plan to hold for long. Okay, anyone who buys doesn't really plan to hold for long. Like, nah, they have the intention, okay, of making a prediction, the intention of predicting the market. Okay, the market, either movement upward movement, okay, or downward movement, from a combination of currencies, in a limited time. Do you get it? So we have swingers, we have scalpers. Yes, we have all of them, but nobody really plans to hold for a very, very long time. That's why we have the time span. We have 1 year, we have 1 month, we have 1 week time frames and all of that. Okay, we are only speculating. Anything can happen at any time. Okay, forex is so unpredictable, even though it's predictable. It's so unpredictable too. So it is speculative. You are predicting the price at a limited time. All right, at a limited time. Okay. So we will talk about forex and then the currencies. Okay, so forex consists of two groups. Um oh, sorry guys, I have to talk about this one first. Sorry. Um Forex consists of pair of currencies. Okay, pair of currencies. And you as a trader, you are the one that you have to speculate or predict the movement of the price, either upwards or downwards. Okay, and then the currencies. Okay, they are presented in combined pairs. Okay, so you have euro USD. You have euro USD, and that's for euro. Okay, the euro and the dollar. Okay, but then this is how it is written in forex. Okay, and then we have the GBP JPY, GBP JPY, and that's Great Britain sterling. Okay, the sterling, and the Japanese yen. Okay, the Japanese yen. So they are in pairs, and so we have 24 other major and minor pairs to 24 other major and minor. I hope you guys are writing everything that I'm doing, even though they're major. And that's why I told you guys to listen. Okay, you listen and then you just watch the screen. Maybe I'll write something. Okay. So it's now to tell you guys forex is grouped. Okay, the currencies, they are grouped into two major. Did I even say major? We have two groups actually. Even though it's three, I wouldn't want to go there because we have the exotics too. But then now let's go for the two groups. We have major and then minor. So we have major pairs. Okay, major pairs and then minor pairs. And then with the major pairs, we have euro USD. Just know, say the major pairs are the ones that has the USD in it. Okay, so we have the euro USD, we have Australian dollar USD, we have the GBP USD. Do you guys see it? Good. We have USD JPY. We have USD CHF. We have USD Canadian dollar. We have New Zealand dollar US UAEY. Okay, and so from here, do you guys see the USD, Euro USD, the Australian dollar USD, the Great Britain pounds USD, the USD JPY, um, the USD Swiss franc, the USD Canadian dollar, the USD New Zealand dollar. Okay, these are the major pairs. Okay, and then we have minor pairs, or what I call crossed pairs. Okay, pairs crossed pairs, and they are pairs that are the combination of two major pairs. And listen, this is very, very important. Let's say this is a cross pair, right? Euro JPY, and people don't really teach this. It's very, very important that you note this. The Euro JPY is actually from the sorry, did I say Euro JPY? I mean Australian dollar JPY. It's actually from the Australian dollar USD times the USD JPY. Do you guys understand this? Okay, so the value of this times the value of this is what is going to give you this. And then I'll show you guys an example. Let's go to trading view. Okay. Let's go to trading view. Let's look at something here. I don't really trade currencies though, but then I still have this here. Let's see. Okay, so Euro USD, right? I want something that, hang on guys. Euro JPY. Uh let's see. Okay, I think I don't really have a good network reception. Let me see if I can find anything here. No, no. Oh, that's too bad. So do you guys see this one? Euro USD, right? Euro USD has 1.1161. That's the value, okay? And then Euro USD, okay? Euro AUD has 1.6474. 1.6474. We have 1.6 1.6, sorry, I'm talking about this one. Good. Euro USD has 1.116. Okay, 1.1160. Okay, and then AUD USD. Okay, AUD USD also has 0.6773. 0.6773. I don't know if this is the right pair that I should be using. And then Euro AUD has 1.6475, right? Yeah, I think that's not the pair that I should be using. But I wanted to, I wanted to multiply for you guys to see. I think I'm not using the right pair, so yeah, fuck me. But let's continue. But then what you have to know is that when you see something like Euro, Australian dollar JPY, okay, it is a combination of Australian dollar USD times USD JPY. Okay, all right, let's continue. So this also means, okay, this, all of this that I did there also means that what is happening here, okay, this is a different pair that you can trade, and this is also a different pair that you can trade. What is happening here and here affects this one directly. Even though you are trading them, you are not really trading them. Whatever happens here, it affects this one. Okay. I'm sorry for delaying the time a little bit, but that's what we have to, the price we have to pay for learning Forex. That's whatever you are seeing here, they affect this one. So even though you are trading this, you are not really trading this. You are trading this indirectly. And that's very, very important for you to note. All right. So we have, some simple Forex foundation that I would like to put out. And then this one I'll be typing them. So we have USD. We have USD And that USD is what? US dollar. Everybody knows this. We have GBP, and everybody knows this one too is British pound. British pound. We have CAD, and that's Canadian what? Canadian dollar. Okay. We have NZD, and that's New Zealand dollar. We have EUR, and that's the euro. Very, very easy for you to get it. We have CHF, and that's the Swiss franc. Okay. We have AUD, and that's Australian dollar. We have JPY, and JPY is Japanese yen. All right. Yeah, so that's some simple forex foundation that you should have the initials of the currencies. Okay, so let's continue our lecture. Now let's imagine that Euro USD. Okay, let's imagine that Euro USD. Oh, let's imagine that Euro USD. Okay, it's at a rate of 1.0500. This is just like an assumption, right? What does this mean? Okay, what does this mean when we say Euro USD is at the rate of 1.0500? This means that to set the base, okay, which is euro, to get the base, okay, to get the base, which is euro, you need 1.0500 of dollars. Okay, and so that means that if you want 1 euro, you need 1.0500 USD. I hope you guys understand this. Okay, if you see anything like this, Euro USD, GBP USD, and then you see it being quoted to this number or any number, know that if you want one of the first currency, which is the base currency, okay, you need that value that you see there, which is this one, of the quote currency. So if you want 1 euro, you need 0.05 1.0500 USD. I hope you guys understand this, please. Okay, so we move forward. And so in forex trading, you can trade two sides. Okay, you can trade two sides, and that's buying, or someone will say going long, and then selling, and then that one too, someone will say going short. I don't really say buy long and short. Or more kind long and short. No more. Okay, buying and then selling. That's forex. You are either buying or selling. So when you are buying, it means you are speculating that the price is going up. You are predicting that the price is going up. After your analysis and everything, you think that the price is going to move up. And then when you sell, that's the opposite. that the price will move downwards. That's for the buying and the selling. So buying, we call it a bullish market. Bullish market is when the price is in an uptrend. And now I'll get there. Okay, sorry that I'm bringing these technicals to the basics. Okay, we'll get there, but I just have to make it clear. We talk about bull because bull, when they are fighting, they use their horns to raise you up. That's why it's called bullish. And then the sell is bearish. Okay, bearish. That means the price is moving down. Okay, it's moving down in this way actually, not the other way around. uh, okay, and so that one too with the bear. The reason it's called bearish is because bears, when they are fighting, they tend to hit you with their hands down, as in when they raise their hands and they'll get down on you. That's why it's called bearish. I don't know who brought this terminology, but it makes sense, right? Yeah, so now that we have talked about the euro and the USD thing, you guys have to understand something too. When you buy, okay, when you buy the euro USD, okay, when you buy the euro USD at this price, you mean that it should go upwards. So you expect this to move upwards. Okay, and so you are assuming that the euro at that time is stronger, okay, than the dollar. That's what you are implying, that the euro is stronger than the dollar. I hope you guys understand. Yeah, so let's say GBP USD2, and then you sell. You mean to say that the USD at that time is stronger and the GBP at that time is weaker, and so it's going to fall short. Okay, so that's our lesson for today. I hope you guys, if you don't understand anything, please you can DM me. I'll put my number across. Let me just type it here: 0257589244. Okay, and I am Morrison. Okay, so if you don't understand anything from what I've explained in this video, please you can DM me. You can DM me, and then I'll explain things to you better. Okay, so this is our number one lesson for today. Not tomorrow, sorry. We'll continue next time. But I'll make sure that I put videos in my channel frequently. So you can search my channel too on WhatsApp, and that's Morrison, okay, Trading Academy. This is going to be a long ride, but a nice one. We are all going to trade together. Sometimes I'll put in signals so that we all try our hands on it. Forex is all about taking risks, and I call myself a professional, professional risk taker. We have unprofessional risk takers there, but I am a professional risk taker. Okay, that's my job, taking risk professionally. So thank you for today, and thank you for watching this video too. Bye.